For the last 3 decades, Knowledge Center at Bursa has offered technology, resources, services, space, and a sense of community. Since 1985, 14,000 titles have been collected, with care and attention to high financial literacy standards. In collaboration with a global community of institutions, we ensure access to the world's diverse intellectual and cultural economic heritage, as well as fast online services for connectivity to the financial world. Serving the Bursa Malaysia community and beyond, Knowledge Center at Bursa empowers you in your trading and investment analysis research.
Financial information at my fingertips.
Visit Knowledge Center at Bursa Malaysia today for the collections, for the services, for the sense of community.
You have suffered financial loss while investing, and you think your bank, broker, fund management company, unit trust management company, PRS provider or distributor, or their agent or representative is responsible. You need help sorting out the problem or want to seek redress. Where do you go? Sidrek is here to help you start the conversation and reach some resolution. First, lodge a formal complaint with a company that sold or offered you the unit trusts, shares, derivatives, or other capital market product or service. But you're not happy with their response. You have 180 days from their final written reply to come to Sidrek. Or if there's no written response, and it's been 90 days since you wrote to them, you don't need to wait longer. You may come to Sidrek even though you haven't received a final response yet. Sidrek first checks the eligibility of your claim. For example, is it within Sidrek's claim limit? Is it against a member of Sidrek? And so forth. If your case is eligible, we begin the dispute resolution process. All information in this process is confidential. We get both you and the member you're complaining against to sit with us and have a conversation. Documents and information will be required from both parties. No lawyers are allowed in the mediation process, as we keep the discussions informal and private. Our mediators are impartial and will hear both sides out and help parties communicate constructively towards resolving the dispute. 2 outcomes are possible at this stage. Either both you and the member agree to a settlement, or you don't. If the both of you agree to a settlement, an agreement is signed and the mediation process ends successfully. But if both you and the member fail to reach a satisfactory resolution, mediation has thus failed. But don't worry, Sidrek then proceeds to the next stage, adjudication. During adjudication, parties are given the chance to provide any further information to help their case and ask each other further questions. Our adjudicator will then study and consider all facts and information provided, including the conduct of the parties, laws, and best industry practices, as well as what's fair and reasonable. Sidrek's adjudicator will then make a final decision on the dispute and the monetary claim. If the decision is in your favor, it could be a full award or a partial award for your claim. But if the decision isn't in your favor, then no award will be made. You, the investor, will still have a choice. If you reject the decision, Sidrek will simply close the case and you may seek other legal avenues for redress. If you choose to accept the decision, however, the member has to comply with it. Once the parties have confirmed compliance to the decision, Sidrek will close the case. So let Sidrek help start the conversation towards resolution. For more information, visit sidrek.com.my or call 03 2282 2280.
Bursa Malaysia has been part of the Malaysian economic growth for over 4 decades. We have been working relentlessly to create a transparent, efficient, and vibrant stock exchange.
While we've been working at building a vibrant marketplace, inclusivity and contributing towards economic growth, we have also channeled efforts and resources towards supporting the community at large. Shares to Share is one such effort, which has been developed to create positive impact towards society and the environment. To put it simply, Shares to Share is a transparent and easily accessible facility that enables investors to donate their listed securities or proceeds from the sale of their listed securities towards charity through Yayasan Bursa Malaysia. You can donate odd lots or even board lots. The funds from the sale of these shares will be channeled to approved charitable organisations and their respective initiatives or projects.
Bursa Malaysia has waived its portion of the transfer fee, clearing and trading fees for all transactions that are conducted under Shares to Share. The participating brokers of Shares to Share have also agreed to waive their portion of the transfer fee and brokerage. The charitable organizations that have been selected have undergone the necessary due diligence process and have been duly approved by an independent selection committee.
At least 500,000 Malaysians live with some kind of disability. They are most of the time being left behind. We need to empower them, otherwise they will continue to be the liability. A lot of human resources wasted from this group.
We provide a lot of support for persons with disability who are young adults and adults. We have a social enterprise called Project I Am Possible, where we managed to hire all persons with learning disability to work here. We have a cafe, bakery, weaving, and we have an art gallery.
Purity of thought, word, and deed, that is action, is very important to be really successful. We must know some skills to be able to help us then paperwork. The grant from Shares to Share will be used for, one is sewing, handicraft, classical dance, and so on.
Our patients have to be fed, they have to be looked after. We look out for any sort of disease they might develop, and also those unforeseen circumstances. Thanks to Bursa's initiative, we can be a little bit easy on our patients if they are family members.
Donations will all be channeled to organizations that are involved in the sustainable development of Malaysia. The Shares to Share scheme offers you the chance to do so in a simple and effective way.
Bursa's Shares to Share allows us to do good by donating our shares to charities. Join us in making a difference to the society by donating your listed shares.
Shares to Share is open to all donors, individual as well as corporates or other types of entities. You can transfer your listed securities via Bursa Anywhere app at a click. For more information, please visit our Bursa Malaysia website.
Alright, so good evening everyone. So welcome to today's webinar brought to you by Bursa Malaysia and managed by LifeChamp. The title for today's webinar is Can't Beat Time Decay? Select the right warrant. My name is Carmen and I will be the moderator for this webinar. So before we proceed any further, allow me to do a short disclaimer. So please be reminded that everything that is shared in this session is mainly for educational purpose. By no means that we are providing any advice to sell or buy any securities, which means that you are 100% liable in any if you make any investment decision. All right, so with that being said, allow me to introduce our speaker today, who is Mr. Tucker Chia. Tucker Chia started off in banking industry as the management associate covering departments such as corporate banking, group strategies, and asset management. Currently, he's a senior analyst in equity and commodity derivatives division of Maybank Investment Bank, which is a leading issuer of structured products and structured warrants in Malaysia. Notably, he conducted more than 12 webinars and seminars with over 700 clients, even with only 1 year of financial market experience. On top of that, he's the core content curator for Maybank's IB Telegram channel, Trade with Maybank, catering to the readership of more than 10,000 subscribers. He's passionate about the market and has the zeal to educate investors. Last but not least, he holds a bachelor's degree in international business from Help University and a CMSR dual license holder for dealing in equities and derivatives in Malaysia. Please welcome Mr. Tucker.
Hi everyone. Thank you very much, Carmen, for the warm introduction. It's glad to see that so many of you turn out here this evening, right? Taking your time off during a weekday to join us in this webinar that is actually organized by Bursa and also supported by LiveChamp, right? So I think I can go on to share my screen real quickly.
Yep. All right. I'll pass the floor over to you.
All right. Just a moment. Okay. Okay, I hope everyone can see my screen right here. So just like what Carmen mentioned as well, today we will go through the process of selecting the right warrants, because especially in structured warrants, there is a factor called time decay. So just to list out the agenda for this evening is that I'll go through some of the advanced term of structured warrants, the love-hate relationship with time decay, then the process of selecting the warrants the right way, and also finally, how to actually use Live Matrix to your advantage, okay? So I hope this session will be informative and also educational for all the attendees here this evening. So let me just get right into it. So let's just dive right into the intricacies of structured warrants, and let's just clarify some of the key terminologies or terms that you need to know when selecting the right warrants. So let's talk about the exercise ratio firstly. So this is actually the fixed amount of warrants required to exchange for 1 unit of the underlying asset. So if you see a warrant with a higher ratio, it actually means that the cost of purchasing the warrants per unit is lower. So this makes the warrant more accessible from both a price point and also capital outlay perspective. So as an example, if the exercise ratio is 10:1, an investor would need to purchase 10 warrants to replicate 1 share exposure. So understanding the exercise ratio is crucial for investors as it can affect the cost and potential profitability of the investment. And secondly, we have premium. So this determines how much more a warrant holder has paid relative to purchasing the underlying asset directly. So this is actually, how much you have paid in extra in exchange for the benefits of a warrant. So in other words, it actually indicates the amount that the underlying asset has to appreciate in order for the structured warrants to actually break even. So the break-even price for some issuer structured warrants can actually be easily found on their website, and it actually shows the current break-even price and also premium in terms of percentages. So the lower the break-even price, the cheaper it is for investors like you to gain leverage over the share. So investors need to consider the factor of the premium, especially when you want to make any investment decisions, because it will impact the potential return on the investment. And moving on to gearing and also effective gearing. So let's just go ahead with gearing first. So this is actually a multiplying factor that symbolizes the amount of capital otherwise required for an investor to gain the same exposure to the underlying asset. Because what gearing represents is actually the leverage effect that a structured warrant can provide. And also for effective gearing, it actually refers to the percentage change in the price of a structured warrant corresponding to a 1% change in the underlying asset price. So just for your information, effective gearing is actually calculated by using gearing multiplied by delta. So you don't have to worry whether, how do you actually compute, because most issuers out there in the market has effective gearing computed already on their website. So structured warrants actually amplify the return of your investment, allowing you as an investor to control a larger amount of underlying shares than they would actually be able to using the same capital. But of course, with a higher reward, the risk is also higher. So it is essential to note that a high gearing or high effective gearing isn't essentially good, because it also amplifies your losses. All right. Moving on. As we go on further to understanding structured warrants more, there are also three key terms I would say that investors must be aware of, which is delta, warrant sensitivity, and implied volatility. So these three terms are actually very important, and investors have to be aware of these three items. So let's go through delta first. And delta actually represents the percentage move of the warrant price relative to its underlying asset price movements. It basically measures how much the price of a warrant is expected to change for every 1 ringgit change in the price of the underlying asset. So for example, a warrant with a delta of 50 would be expected to increase in price by 50 cents for every 1 ringgit increase in the price of the underlying asset. So delta is also important to use when you compute effective gearing, like I mentioned earlier, and also for sensitivity, which I will go on later. So delta can be utilized as an indicator of the likelihood for a warrant to mature in the money. For call warrant, it is 100% being almost certain and 0% being not probable, while the opposite is true for put warrant, whereby it's negative 100% being highly probable, almost certain to mature in the money. So in this case, a higher delta actually indicates a higher probability of the warrant maturing in the money. So delta is especially useful in understanding effective gearing and sensitivity. So now let's get into sensitivity, right? So sensitivity actually measures how much does the underlying asset price need to move in order for the warrant price to move correspondingly. So for this, it actually takes into account delta, like I mentioned earlier, and exercise ratio from the previous slide. So these two components is actually used to calculate the sensitivity of the warrant. So if the structured warrant, for example, has a delta of 100% and an exercise ratio of 2, so what this means is that the delta per structured warrant is 50%. So if you think about it, the higher the exercise ratio, the delta per structured warrant will be lower. So what this means is that if the exercise ratio is a bit too high, the sensitivity of the warrant will also be affected. And lastly, we have implied volatility. So this is actually very crucial in determining the value of structured warrants. It actually represents what the market's perception is of the volatility for an underlying, for example. And this is usually expressed in percentage terms, and investors should understand that the price of a warrant is affected by the changes in implied volatility. So higher implied volatility generally leads to a higher warrant price, while lower implied volatility leads to a lower warrant price. So this implied volatility, right, is especially useful when making comparisons on the relative expensiveness between multiple structured warrants. So you can take it, for example, it's like a PE, right, price to earning ratio, when you want to compare shares of the same sector, and implied volatility is something that you can use for structured warrants. So this is an important concept for the viewers here today to understand, because the price of a warrant is affected by the changes in implied volatility. So moving on is that one important term that I like to stress is actually delta. So a reminder on delta is actually there are various level of delta for different investment style traders. So allow me to reiterate Delta is actually also, you can take it as a risk metric that estimates the changes in the price of a structured warrant given a 1 ringgit change in the underlying. So delta, like I mentioned, is actually denoted in percentage term to quantify the absolute changes in the structured warrant price relative to the underlying share price changes. So delta values can be positive for a call warrant or negative depending on the type of structured warrant. So for a call warrant, the delta will always be between 0 to 100%, whereas for put warrant, it will be 0 to negative 100%. Why is it the relation this way? Is because for the call warrant, as the share price increases, the call warrant will increase in price as well. Whereas for put warrant, because it is the opposite, right? Because the put warrant only increase in price when the share price goes down. So therefore, you may see that the delta is actually expressed in the opposite direction. So understanding delta is actually very important. It is actually the key to help you determine how a warrant price is likely to change based on the underlying share price movements. Okay, so now that I've covered the important terms, let's just go ahead with, looking at the relationship of time decay and structured warrant. So in the previous webinar where Amy actually discussed the factors that determines or dictate moneyness in the context of structured warrants, right? In this webinar, I'll dive in deeper. And the two key factors I'd like to mention is exercise price and underlying share price, because these two actually determines the intrinsic value that investors pay for a structured warrant. So let's assume in this example, we want to purchase a call warrant with a price of 50 cents. So let's just use this as an example. And in this example is, of course, a call warrant. So to just give a quick overview is that when the exercise price is lower than the share price, the call warrant intrinsic value is higher and vice versa. So in an example, the current share price is 3 ringgit 30 cents, while the exercise price is 3 ringgit. So what is the intrinsic value? So therefore, if you were to take the share price and you minus the exercise price, this would actually leave you an intrinsic value of 30 cents. So this is just basically taking the difference between the share price and the exercise price. So it is worth noting that intrinsic value is a direct calculation that simply involves subtracting the current market share price from the exercise price, or also known as strike price. But there is another component that actually makes up the total value of the warrant, known as time value. So you can see in this slide, you can see the blue part. So that is actually time value. So in this case, the warrant price is 50 cents and the intrinsic value is 30 cents. So if you were to subtract that, it will leave you with the time value of 20 cents. So for this call warrant, the time value is 20 cents, which is actually the difference between the warrant price and intrinsic value. So sometimes you may see that they may refer time value as the premium as well, because it's also actually an amount that investors pay for time. So it essentially reflects the value that investors attach to the possibility that the share price may increase further over time. So one thing to note is that longer dated structured warrants generally have more time value as they possess a greater amount of time left until expiry. So going back to this example is that when the current share price is higher than the exercise price, the call warrant has intrinsic value and is considered in the money. So therefore, it is important to note that the intrinsic value of a structured warrant increases as it gets deeper and deeper in the money. So investors must keep an eye on the moneyness of their warrants to ensure they are getting the best value for their investment. So how does this actually ties up with time decay? Let me go on to the next slide. So time decay, why I say, there is a love-hate relationship, because sometimes when you want to invest or you want to execute your investment ideas, you may have to hold it for more than a period of maybe 5 trading days or maybe over a month, or maybe 2 months. So when using structured warrants to gain that leverage exposure, time decay is actually a very crucial concept that investors must understand before purchasing structured warrant. Because as time passes, the value of the structured warrant will decrease. And this is known as theta in terms of Greeks, or more simply or more layman is time decay. So for investors, buying into structured warrants or using structured warrants as a financial tool must be aware that warrants will reduce in value over time as the structured warrant reaches its expiration date. So let's see how the concept of time decay plays out in the following illustrations. So two assumptions will be made here is that it is a call warrant, it is in the money, and is held to maturity, and also the underlying share price and also all the other parameters are unchanged. So let's work on using the same example. So this is a call warrant with an exercise price of 3 ringgit and the underlying share price is 3 ringgit 30 cents. So this is assumed that we hold it to maturity and the warrant price right now is 50 cents. So this means that the intrinsic value is 30 cents because share price deduct the exercise price, you're left with 30 cents. And the remaining will be 20 cents being the time value, direct and straightforward. So let's just say you held this on for another 3 months. And due to time decay, the warrant price has actually decreased to 40 cents. So because the underlying share and also other parameters such as exercise price remains unchanged, the intrinsic value remains the same, if you notice, but the time value has decayed by 10 cents and the investor is left with 10 cents of time value. So what if you hold it until maturity, right? So let's just say at maturity, the time value of the structured warrant will have fully decayed, leaving you only the intrinsic value, which is equivalent to the warrant price of 30 cents. So what I'm trying to say is that it is important to remember that time decay is a negative number. And as the expiration date nears, the time decay is likely to increase and reducing the value of the structured warrant. So it is vital to understand that structured warrant is meant to be a trading tool and not for a long-term investment period. So it is therefore better to trade structured warrants rather than hold them for an extended period of time. This is because theta, right? Theta in Greeks, which is the amount by which a structured warrants will actually decline every day up to maturity and is always expressed as a negative number. So as such, it is very important to monitor time decay carefully in order to make informed trading decisions. So because time decay is like a donut, right? It's getting eaten up little by little every day. And just like the donut on the slide, you wouldn't want your structured warrants time value to decay away gradually. So on equal terms, no matter how much a share price moves, whether up, down, or just constantly sideways, or it remains the same, the structured warrants time value premium loses a little each day because of theta. So therefore, time decay is a very important concept and you have to set your investment horizon not too extended, not for more than a year, because most structured warrants that are issued in the market is typically 11 to 12 months. So let's just visualize time decay better if the donut didn't do it justice. So let me just share a chart with you and you can see that the time value is on the vertical line, whereas time to maturity is on the horizontal line, starting from 9 months, like a typical structured warrant expiration date, to 0 months, which is at maturity. So let's just watch how time decay actually behaves through the passage of time. So as you can see, time decay is actually not linear, okay? And it's not constant. It accelerates closer to maturity. So this means that the amount of time value disappearing from the warrant price is greater with each passing day. So I have to stress this, that time decay also known as theta, refers to the decrease in the value of structured warrants as the time passes by, because every structured warrants that are listed in the market have an expiration date, and after which they expire, it becomes worthless. And as this date approaches, the time value of the warrant decreases. So why does this happen, you may ask? Is because the chance of a warrant to be profitable decreases as time passes. Because say, for example, a structured warrant had, 120 days. And as every, 10 days passes by, the chance of the warrant being in the money will decrease, right? Because there's lesser time left. So therefore, as the more time it passes, the less time there is for the warrant to reach its strike price, and hence the less valuable the warrant becomes. So it is important to exercise caution when you select a warrant, especially if it's a short-dated one or a very close to maturity one, because these type of warrants may not be suitable for investors with a longer investment horizon, but they may be acceptable for some investors out there with a higher risk appetite, seeking for short-term trades or leveraging on the generally higher gearing effect to their advantage. So why time decay is important to understand is because even though if you have tracked the share moving in the right direction, the structured warrant may still lose money due to time decay. So you can think of time decay essentially being like a tax where you pay daily holding on to a structured warrant. The longer you hold on to the warrant, the bigger this tax gets every day, and it surges as it approaches the expiry date. So time decay represents the risk of time and the loss of value of a structured warrant. So taking the example above of you owning a call option, which gives you the right to buy a stock at a certain price, and the expiration date is in 1 month. If the stock price doesn't move much over the next month, your warrant will lose value as time passes. This is because there is less time for the share price to go up to your strike price, and therefore the lesser the likelihood of you making a profit on the warrant. So it is important to keep in mind that newly issued warrants have slower time decay, since time is on your side for the warrant to become in the money. It is crucial to be aware of the effects of time decay when you trade structured warrants to avoid losing value as the expiration date approaches, because time decay affects the structured warrant price and also how much it will cost you to buy a structured warrant. So therefore, structured warrants have a longer time to expiration, such as the newly issued ones, and therefore the newly issued ones will generally be a bit more expensive than the ones that are closer to expiration, because there is more time. So I think I've covered quite a fair bit, and let's just get to frequently asked questions where investors usually ask us. And number one is, should I buy the underlying share or structured warrants? This is a very common one, but I must stress that structured warrants are financial instruments too, designed to be traded and not to be held, because structured warrants provides investors a synthetic exposure to the underlying, but it doesn't give any properties of the underlying, such as receiving dividend, voting rights, and etc. So given that most structured warrants in the market have a maturity of an average about 10 to 11 months, structured warrants are not meant to be held for long-term investment holding by design anyways. So you must ask yourself that, are you aware of your own investment horizon or goal? Or, do your due diligence and research in terms of the direction that you would like to take over the underlying share. And secondly is that, we get questions that, how much should I invest in a structured warrant? So for this, it is very subjective, because there is always a suitable trading strategies for different market conditions and depending on your risk appetite. If the investors have higher risk appetite, they may risk more capital in investing a warrant. And do note that all structured warrants listed on Bursa Malaysia are cash settled and cannot be converted to shares. So do not mistake a structured warrant as a company warrant. It is not. There will not be any physical settlement. Everything will be cash settled. So risk only what you're comfortable with and what you can afford to lose. There's no clear-cut answer or amount because each investors have different risk appetite. So now, the journey in selecting the right warrant. I guess this is the most important part and the most interesting part. So to quickly lay it out, right, before you embark on your journey, or before you even begin to invest or trade, whether structured warrant or shares or any investment, there should be a framework in place before you decide or before you execute. So the 5 important steps to follow are ideation, direction, selection, observation, and accumulation. So I'll just quickly go through this before I dive in deeper. Is that firstly, ideation involves identifying your investment objectives and also forming a clear investment strategy. And it's important to understand the market and the company that you are willing to invest in order to gain insights into the potential movements. And next is direction, because with structured warrants, like I mentioned, there are call warrants where it appreciates in price when the share price goes up, while there's put warrants where it appreciates in price when the share price goes down. So therefore, you have to establish a directional view on the underlying asset. And this includes evaluating macro market conditions and also anticipating potential trends, whether bullish or bearish, in order to make an informed decision, right? And once you have established your directional view, it is time to move on to the selection phase. So this is where you must identify the right structured warrant that matches with your investment objectives and directional view. It is important to look at the warrant exercise price, time to maturity, effective gearing, and sensitivity in order to make the right choice. And after you have selected, it is time to observe the performance. And this involves tracking the stock price movement, as well as monitoring the warrant's price and also implied volatility. And you should always keep an eye on the warrant's time decay or theta and implied volatility in order to identify any changes in its value. And lastly is accumulation. So investors should focus on accumulating profit using structured warrants that matches with their investment objectives, directional view, and selection criteria. And of course, this includes considering some of the risk management strategies out there, setting your exit targets, take profit targets in order to manage your position effectively. Because as an investor, you should not be chasing windfall profits, and you should always take profit along the way in your trading journey. So if you do not have a framework, this is the right framework for you, especially if you want to select the right warrant. So by following these steps, I'm sure that after this webinar, you can confidently select the right structured warrant that is available on Bursa Malaysia, and you will be able to make a better informed investment decision. So let's just start off with the first one, which is ideation. So like I mentioned earlier, this involves identifying the potential investment opportunities that you are interested in. And this involves identifying the underlying that you want to invest in and the potential market movements that you want to take advantage of. So as an investor, it can be challenging to select shares to trade or invest in, and it's difficult to come up with a trading idea, especially when you don't have the time to research or scrutinize each listed company on Bursa Malaysia. That's about almost 900 listed companies in Bursa Malaysia, and you may often find yourself perplexed. And I empathize with this struggle because when money is at risk, you want to ensure that the trade will be profitable. This is why finding the right idea and selecting the correct stock is the most critical step. So when generating your ideas, it is essential to seek out research reports that cover fundamental analysis of the company, or you can visit some of the issuers out there's website or even Telegram channel to get some idea. And even watching out for event-driven news flows, such as when Bank Negara is having their MPC, or when companies will release their quarterly earning results, such as Alibaba releasing their quarterly earnings results tomorrow. And even conduct technical analysis on the share chart. So stock picking is really much based on the share's merits and your conviction of its direction. So the 4 ways, in conclusion, to generate ideas and pick the right stock are fundamental analysis, warrants write-up on Warrants issuer website or Telegram channel, technical analysis, and also event-driven news such as daily news headlines. So the second step would be direction, because once you have an idea, any idea without action are worthless, right? If you have an idea but you do not take action on it, you do not take actionable steps on it, it will be worthless. So in order to take action, we would have to determine the direction that we want to take with that idea, either a bullish direction or bearish direction. So in this step, you need to determine the direction in which you think the market or the underlying will move. So this will help you to select the appropriate structured warrant that will enable you to take advantage of the market movement. And because of structured warrants being available in call and put warrant in the market, you as an investor can actually profit from either direction and capitalize on the downside performance of the underlying using a put warrant. So remember, if you are bullish, you want to look out for call warrant, because as share price increase, call warrant price will increase as well. But if you are bearish, you have a bearish bias, you don't think that is good, you can look for put warrants, because when the share price goes down, the put warrant price will go up. And now, it is time for selection. And let's say you have selected a bullish direction. And the next step in selecting the call warrant is that when you recall from the earlier slides where I spoke about the key terminologies to understand, you can typically follow this, what I call as SET, which is sensitivity, effective gearing, and also time to maturity. You can look at these 3 key items first, and then you can scrutinize further down. It is because it is important that you want a warrant that is firstly sensitive to the movement of the underlying and has ample enough of effective gearing to enjoy the leverage effect of a warrant, and also sufficient time to maturity where you would have time value if in the event the direction doesn't play out as you thought it would be. So why I say that is because if you have a warrant that is sensitive, if in a day the share price may move, few cents, your warrant will move by half a cent, which is a lot in percentage terms. And also why ample enough of effective gearing is because warrants with high effective gearing will move at a larger percentage in relation to a 1% movement in the underlying. So let's just go through this table one by one. And let's just look at this example of MyEG C3Z and MyEG C4P. Of course, as of late or in this year, there has been a lot of news surrounding MyEG losing some contracts or, maintaining their business mode still. So let's just say you have bullish directions over MyEG business model still, right? And there is 2 to choose from. And you can see that there is MyEG C3Z and MyEG C4P. So let's just start with exercise price first. So for example, the first one is that MyEG C3Z is 90 cents and C4P is 70 cents. So right off the bat is that you can see that the C4P is 20 cents deeper in the money, which means it most likely has a higher intrinsic value. And in terms of expiry as well, you can see that the C4P will only be expiring next year, February, so giving you longer time to maturity, and also time value. Whereas for exercise ratio, you see that, it's the same. So there's no difference in that. And if you look at moneyness, of course, you can see that my C3Z is 14% out the money, whereas the C4P is 11% in the money. So this clearly shows that C4P is deeper in the money, giving it a higher intrinsic value. So if you recall from the earlier slide where I talk about delta being the probability or an indicator of what are the chances of a warrant being expiring in the money, you can look at the delta between the two. So you can see that the C3Z is 50.7%, whereas the C4P is 71.4%. So the C4P actually has a higher delta. So what this means is that the likelihood of C4P maturing in the money is 71.4%. And let's look at sensitivity. The C3Z has 5.9 ticks, while the C4P has 4.2 ticks. So as I said, sensitivity also derives from delta, and because the delta is higher for C4P, the sensitivity over here for C4P is also higher. So why is sensitivity higher when the number of ticks is lower? Is because the lower number of ticks is needed to respond to the change in the underlying share price for every 1 cent. So in this case, the C4P would move 1 tick, which is half a cent, for every 4 cents movement in MyG C4P. So meaning to say, if MyG share price was closed at 78 cents today, if it moves to 82 cents, your MyG C4P would move half a cent, okay? And then if you look at the following one, which is implied volatility, you can see that the C3Z is at 66.9%, whereas the C4P is 83.3%. So implied volatility acts like a sort of apple-to-apple comparison between all of the warrants over the same underlying in the market. And obviously, you can see that the C4P is slightly more expensive. But like I mentioned, the deeper in the money or further out to maturity, possessing a longer time to maturity warrant is slightly more expensive. So this can be said or can be seen through implied volatility. But whereas for premium, and I want to stress that premium, or also in this case known as break-even price, is that the higher the premium, the larger the percentage value of the premium, means the higher the break-even price is. So for C3Z is at 29.1%. So meaning to say at current today MyG share price at 78 cents, it has to increase by 29.1% in order for you to break even if you purchase C3Z. Whereas for C4P, it only takes 22.8% from today's closing price in order for you to break even. So in this case, the C4P is also, of course, a lower premium. And moving on to the second last one, which is effective gearing. MyEG C3Z has an effective gearing of 3.3 times, while C4P has 2.1 times. And if you remember, I said effective gearing is derived or computed using gearing times delta. This is because why you may ask that the C4P delta is high, but the effective gearing is low, is because of the gearing component. So gearing is actually calculated by using the share price divided by the warrant price times the ratio. And of course, for deeper in the money warrant, the gearing will be lower because your denominator of the warrant price is higher. And lastly, I want to say that the theta, you can see that for MyG C4P is at 41. So what does this mean is that if you had bought the warrant today, it will decay in time. It will decay its price because of 41 theta days. So in 41 days, if you buy from today, it will decrease in half a tick for every 41 days. So this shows you that there is more time value than the C3Z. So when you look between these two, you may see that C4P is like the better call warrant because it is more sensitive, meaning that it's more responsive to the MyIG share price. It has a slightly lower effective gearing, but this means that your downside is also less painful. And also in terms of theta days, you have ample enough of time of 41 days before your warrant decrease in value. So when you go through the whole process of selection, you can always find for the underlying that you want. And in this example is MyIG, and then you select the few, and then you compare between, in this case, I'd like to highlight is that your effective gearing, your sensitivity, your theta days or time to maturity, and also lastly, of course, implied volatility, right? Once all of those SET is said and done and compared, you can look at implied volatility. So when you select, you have to select the structured warrant that fits, right? That best fits your investment objectives. So you need to analyze the warrant features like this in a table, and you have to go through it thoroughly and take your time with selecting, okay? And like I mentioned before, after you have purchased, it's very important that you have to observe, because structured warrant has an expiry date, and with the passage of time, your structured warrant will reduce in value because of time decay. So this is why when you buy a structured warrant, you must be aware that the warrant will reduce in value over time as the structured warrants reaches its expiration date. So this is like what I've mentioned earlier on the slide in terms of the time decay, the feature in the structured warrant as to why the value will decrease over time. And let's see the chart above as an example. And you can see that on 28th March, right, this warrant and with the underlying share price, it was at 1 ringgit 80 cents and the warrant bid was 8 cents. And if you were to fast forward in just 1 month, okay, on 27 April, you can see that the underlying price remained the same, right? It remained the same. It was still 1 ringgit 80 cents, but the call warrant bid is actually reduced to 7 cents. So this brings me to my point that observing your position or observing your warrant is crucial, right? Because this reduction in warrant price, although the underlying share price is the same over a period of time, is owed to time decay on the call warrant. So even though you have selected the right structured warrant, you still need to closely observe and monitor its performance and the performance of the underlying asset as well. So this will allow you to make timely adjustments to your investment strategy if needed, and also allow you to be aware to not hold on to the warrant for too long. So to sum it up, structured warrants loses value as the expiration date nears, and hence time decay is a negative number. So on equal terms, no matter how much a share moves, the structured warrants time value premium will lose a little each day. So like I mentioned, this is very important to remember: maturity date and time value decay. So the key things, like I mentioned, when selecting a warrant is also expiration date and time to maturity. So you have to always be aware that the rate of decline of the warrant's time value, it accelerates as time passes and when the warrant approaches maturity. Okay. And lastly, accumulation. So you can see in this example, this is over DNEX warrant, and you can see the share price. Of course, DNEX was a darling of the market early last year, where they have business in the oil and gas sector and the semiconductor sector. So it was the best of both worlds early last year, especially when oil and gas prices were moving up and there was still demand for semiconductor. So you can see that if you as an investor, you had bought the next CN call warrant between 3rd January to 17th February, DNEX actually appreciated in price by 66.23%, while the call warrant actually gained a whopping 184.21%. So this is because of the leverage effect of the call warrant. And you may feel like when you witness that strong appreciation in price, you may see like, oh, it can go higher, it can go higher. And this is a very psychological thing with a lot of investors. But what I want to stress here is that between 3rd January to 17th February, that's about a month worth of trading days. And within a month, if you can witness 184% in return, it's pretty good, right? And why not take profit from there? Okay, because you don't know when is the downturn and you don't know what will happen. So even if you don't take from 3rd January till 17th February, the price appreciation of DNEX shares compounded with the DNEX CN leverage effect, you would potentially see almost a double 2 times return using a call warrant instead of using the share. So this is why, especially when you use a call warrant to sort of express your direction, it is very important that once you have hit a certain target price, or if had hit your exit level, it is best that you always adhere to your exit level that you have set. Okay, because why is it accumulation, right? Is because when you trade, and if your mindset is always on chasing exorbitant gains, and over the long run you may find yourself in a loop, getting into unprofitable trades after unprofitable trades, because you think that the next trade or the next trade or the next trade you will profit big enough where it will be enough to cover your previous losses. So accumulating profit in your path of trading structured warrants or even trading, right? It is very important because as a trader, you do not want to risk what you can't afford to lose. And as a trader, you always only place capital at risk that you are comfortable with, and having a target price to exit and always be comfortable with incremental gains. This is why when I was showing you the whole journey, is that you accumulate profits along the way and not looking for windfall profits. Because if you're looking for windfall profits, it will not bode well with your path in trading structured warrants, because every successful traders have entry and exit levels, target prices, stop loss, and also risk to reward ratio in place. And experienced traders know how to be comfortable with and content with small profits, and over the long run, with the incremental gains from the small profits, it will start to snowball. So one thing I would like to tell investors are, ask yourself this question before you enter into any trade, is that, do you know where you're getting out before you get in? Okay, and you can see that when the market downturn and it turns so badly, so quickly, you can see that when DNEX share actually lost 39%, your DNEX CN lost even more at 81.48%. So this is why that structured warrant is also leveraged too, because when it increases a lot, but when the market downturns, your value of the warrant will also be on the leverage downside. Okay, of course, with all this said and done, in hindsight, it's very easy to just pick out or cherry pick some examples, but this is why I want to use DNEX as an example, because at that point in time, DNEX had a really good growth story. They had good exposure to semiconductor industry. They had a good exposure to the oil and gas industry when early last year it was booming. So it is good that always have your investment objectives set out, and also your investment horizon set out. All right. So in order to quickly recap and to just, say it again, is that the journey to trading structured warrants is ideation, direction, selection, observation, and accumulation. Okay? And let's just go to the next pit stop of FAQ number 2. And let's just say you decide to hold to maturity, right? You might be wondering how or when you'll get your cash settlement. And for this, structured warrants are always cash settled and it wouldn't be converted into shares. So cash settlement is only entitled, okay? It is only entitled to structured warrants that mature in the money. And the cash settlement will be made to the bank account that you have registered with your broker, and payment will be made within 7 business days after the expiry date. So it's a T+7. So, and for those without bank account details registered, we will issue a check and mail it to the address that you registered with your broker, which may take a longer time, approximately 2 to 3 weeks to arrive. And also, of course, that begs the question, should I hold a structured warrant until expiry? I've emphasized this before, and I want to stress this again, is that structured warrants is a trading tool, and hence it should be treated as a short-term instrument in your decision-making and your whole decision process. You may lose significant time value if you choose to hold till maturity, which may not be the best option in most cases. And remember, structured warrants have an average maturity of 11 months from issuance, and structured warrants should always be treated and viewed as a trading tool and not a long-term investment holding. Okay? So on to the last part of this presentation is that how do you use live matrix to your advantage, right? And this is where I want to put that preparation and opportunity, when preparation and opportunity meets, it equals to success. Because now that you know the effects of time decay on a warrant and the features of a warrant, you need to be aware in order to select the right warrant. So now, are you ready to trade structured warrants? So one tool that I would like to introduce is the Warrants Live Matrix. It is actually a very important tool, especially when you come to trade structured warrants, because it provides and feed market data on the performance of the structured warrant and is available on most websites of the issuers that market makes and issue the structured warrants. And this matrix is incredibly useful for investors who need to make informed decisions about which structured warrants to buy or to sell. So you can see that this matrix is designed to be very user-friendly and also easy to navigate because it displays the indicative bid-ask of structured warrants that are available for trading, along with their exercise price, maturity date, as well as other relevant information that I've mentioned. So in other words, it actually provides a comprehensive and an up-to-date view of the structured warrant, allowing you as an investor to make a more informed investment decision. So if you look at the slide, you can see that this is actually a call warrant over MRCB. It has an exercise price of 33 cents, 0.5 exercise ratio, and all the other features at the bottom. So you can see that I highlighted the top part is fixed and the bottom part is variable. So the variable part actually changes over time or daily because of the movement of share prices. And you can see that the live matrix on the left, if you notice, it is highlighted in white and then gray, white and then gray. So if you notice the sensitivity, it says 1 tick. So what does 1 tick means? So 1 tick essentially means that for every 1 cent move, your MRCB call warrant will move by ½ cent. So if you look at an example here, where the bid ask is at 31.5 and 32, your call warrant is at 6.5 and at 7. Once it move up 1 cent, your call warrant would move up by 7 cents to 7.5 cents. So this is what we call a like-for-like tick movement, and these are usually for traders, for day traders who are looking to get in and out quickly throughout the day. So in this case, if you look at the live matrix on the left, you can sort of predict or expect what will the bid ask of the call warrant to be at certain price level of the underlying share. So this is why when you look at live matrix, it is useful for investors who need to react quickly to market movements, because it provides update on changes in the price of the structured warrants, which allows you to adjust your trading strategies accordingly. So by using this matrix, investors can stay up to date with market developments and also take opportunities as they arise. Okay. So you've seen how the call warrant live matrix move is that when the share price goes up, your call warrant value also goes up. So what about for the put warrant? So in this slide, you can see that this is a put warrant over mBank, and you can see that the exercise price is 4 ringgit, exercise ratio is 5, which is fixed. And then you can look at the variable, where you will notice that delta is actually negative 62.4%. So what this means is that it has a 62.4% chance of expiring in the money, which in this case, you can see the moneyness is at 9.6%. So in this case for mBank HC, you would notice that the ticks is actually 4 ticks. So what this essentially means is that for every 4 cents decrease in mBank shares, your mBank put warrant would increase by half a tick. So if you look at this from 3 ringgit 66 at mBank's offer, and it goes down to 3 ringgit 62 or 3 ringgit 61, right? You will notice that your mBank put warrant will actually increase from 10.5 to 11 cents at the ask. Okay. So overall, in conclusion, the structured warrants live matrix is a powerful tool to help investors to make better informed investment decisions. And the ways or the advantages is that it allows you to identify trading opportunities, because the matrix provides real-time information on the prices and performance of structured warrants. So by monitoring, if you go to some of the issuers' website, they allow you to put up to 9 live matrix on the website. You can monitor that, and you can identify trading opportunities as they arise in order to take advantage of the market movements. And also, of course, it allows you to analyze the warrant performance, because it allows you to compare and also analyze the performance, or sort of how fast a structured warrant would move between different warrants by different issuers in the market. So if you study the performance, you can make better informed decision about which warrants to buy or sell at the given point in time. And of course, live matrix can be used to monitor the market, because the matrix provides updates on changes in the price of the warrant. So by monitoring it, investors will always be up to date on any market movements, and you can adjust to your strategies accordingly. And of course, one advantage of the matrix is actually allowing you to evaluate risk, because it gives you a wealth of information, such as the exercise price in the live matrix. It will show you the exercise price, maturity date, and most importantly, of course, the bid and offer prices. So by analyzing all this information, you as an investor can evaluate the risk and potential reward when investing in a particular warrant. And overall, the live matrix is a valuable tool to help you as an investor to trade more effectively in the Bursa Malaysia market using structured warrant. Because using the matrix to monitor the market, analyze the warrant performance, and evaluate risk, it makes you as an investor more savvy, more sophisticated, and you'll be able to make better investment decisions in order to help you to achieve your investment objectives. Okay, so that wraps up for my presentation. And I think it is time for Q&A right now.
All right. Yep. So moving on, we're going to have a Q&A session. So a gentle reminder to everyone here to drop your question in the Q&A box instead of the chat box here. So we do have a few questions on hand. So the first question, someone commented, I learned that the cheapest warrant are the ones with the lowest implied volatility. How true is this statement?
Okay, actually, very good question, Lim. That is actually, you can look at it that way because, like I mentioned before, implied volatility for the structured warrants market is actually a price to earning ratio when you compare shares, right? So if you know that the structured warrant is actually a derivative, it's also actually an option. So what option is basically using implied volatility to price the option. So in this case, yes, you are right on a very technical basis, because from a very fundamental perspective is that warrants with the lowest implied volatility are generally the cheapest one. Okay.
All right, so moving on to the next question. So can the Maybank investment improve the live metrics by adding more tick, for example, 1,000 tick to 2,000 tick to be listed so that we can scroll through it?
Okay, so I think to Leong, we will take your feedback. We will consider your feedback, and I think you might be referring to the index live matrices where the sensitivity ticks are usually 1,800 to like 1,000 or 2,000. We will take your feedback into consideration and we'll relay it back to the team. So thank you very much for your feedback, and I understand as to why the need of adding more tick so that you can see your potential exit or entry. But we have recently made some updates. You can see a bit more bid and ask levels for the FBM KLCI index warrants by Maybank IB.
Okay, so thank you. So for the third question, would a cheaper premium be better in selection if everything else equals?
Okay, I think to this question, right, Jason, if you were to look at premium, so you must understand that premium is the break-even price of the warrant. So meaning to say, if the break-even price is 3 ringgit and your current share price is 250, it has to increase by almost 50 cents, right? So then there comes a point, right? Whether do you have a view that the share price will increase to 3 ringgit, or maybe if the warrant that you're looking at, right, has a almost a 30% premium, meaning to say the share price has to appreciate by 30%. Does it fit your purpose in terms of the sensitivity or the effective gearing? Or maybe it has quite a high effective gearing of, let's say, 5 times, right? So if the share price were to increase 1% and you are expecting that they will be announcing their results, and you would expect like generally 1 to 2% movement after they announce. So if premium is higher on that end due to a higher effective gearing, which serves your purpose, and then there's no harm with going a bit of a higher premium, because a higher premium generally denotes that the exercise price for that particular warrant is higher. Hence, if you use the exercise price plus the warrant price times the ratio, that's why the break-even price is so high. So in turn, your effective gearing is also higher. So in this case, it really depends on your investment objective. Are you looking to have a highly levered or a high leverage warrant in order to sort of execute over some announcement that may be made, whether they are acquiring some other company, or the financial results that came out where they have their outlook in terms of the market for the remaining of the year to be a bit more bullish. So in that case, a slightly higher premium would work well in your favor. But of course, if you are holding it on for a bit of a longer period of time, cheaper premium, which means that the warrant is a bit closer in the money or is already in the money, which leaves it a bit more intrinsic value. But of course, if there is intrinsic value, this would mean that the cost of purchasing the warrant on the market will be a bit more expensive because of the high intrinsic value. Hope that answers your question, Jason.
Okay, so moving on to the following question. There are numerous metrics. Which are key ones in order of importance?
I would say the importance of it is very subjective. It is really dependent on what is your investment objective and horizon. But personally, I would say it is how I mentioned SET. This was actually coined by my colleague Amy, where she says that, SET. So SET stands for sensitivity, effective gearing, and also, of course, time decay or time to maturity. Because number one, you will want to have a warrant that is highly sensitive, meaning to say the number of ticks are low. So the lower the number of ticks, meaning the share price will have to just move 1 or 2 cents, and your warrant will move by half a cent, which is 1 tick. So why I say sensitivity first in this case personally is because warrant is meant as to be treated as a trading tool, right? It's not for long-term investment holding. So if you have a highly sensitive warrant, and let's just say you bought it today and you are expecting some movements tomorrow, or you look at the technical chart and you did some technical analysis and you see maybe inverse head and shoulder, or maybe you see a ascending triangle or some other stuff in the candlestick pattern. So with that, you can see that, sometimes, if it moves in your favor, you will want a highly sensitive warrant because, for example, if the warrant was 1 cent and it moved by half a cent, in terms of percentage, it's already 50%, which is really high. So sensitivity first, then effective gearing. So whereas for effective gearing, you may want to look for something that is not too high, because if it's a 10 times effective gearing, if it's a call warrant and the share price moves up by 1%, yes, you may gain 10%, but of course, on the downside, if it's, in the second session on Bursa Malaysia and it goes down by 1%, it just goes against your view, that would be immediately a 10% loss, right? So I hope that answers the question, Tam.
Okay, so for the next question, for call warrant, are we only looking to buy that are in the money?
It's hard to say whether, for investors out in the market, whether they are looking to buy only call warrant in the money. But like I mentioned in the table where we were comparing between the two MyAG warrant, you can see that the warrant that is in the money has a higher delta. And in the case of warrants, delta is a big factor in terms of counting your effective gearing, because effective gearing takes into account your gearing multiplied by delta, whereas your sensitivity takes into account your delta divided by the exercise ratio. So of course, if you are expecting some short-term movements, for example, like I mentioned, Alibaba releasing their results tomorrow, you can look for something that is closer to at the money, right? Or it's in the money to sort of have that high sensitivity. But if not, if you are looking for something that, Alibaba tomorrow may announce that their results beat expectations, their outlook in the market is very bullish, you can potentially look for a out of the money one where it is highly geared or with a high effective gearing, because Alibaba shares tends to move more than, it swings in a day probably 3 to 4%. So that gives you that added leverage factor from a call warrant, which may fit your investment objectives.
Okay, so then moving on. Under what circumstances should we pick shorter tenure warrants, and under what circumstances should we pick longer tenure warrants?
Okay, I think for this, to put it in a very simple way is that if you're looking for shorter tenure warrants, typically if you look at the market, shorter tenure warrants tend to be a bit out of the money and tend to be with high effective gearing. So in that case, you can see that shorter tenure warrants, some investors out there tend to use shorter tenure warrants for a specific event, like earnings, right? Or, like for example, when FOMC announced whether they will hike their rates, pause, or maybe even cut. So shorter tenure is very event driven because time is not on your side for you to see your strategy play out. That's why when you pick shorter tenure, you're looking for a very sharp movement in the market, right? You are less so of, waiting to see whether this will play out or, whether your strategy will play out. So therefore, for the circumstances in terms of picking a shorter tenure warrant is that when you are expecting certain events to happen and you want to take advantage of it for that sudden spike in movement in that intraday, you can look for a shorter tenure one because your investment horizon is already shorter in tenure. Whereas for longer tenure warrants, it could be DOSM releasing the CPI results, or even in the US, they release their retail sales, such as like China releasing their retail sales number today. And those are from a very macro perspective. So longer tenure warrants tend to fit those kind of strategies or sort of investment ideas, right? So I hope that answers the question.
All right, so moving on, we only have 2 more questions left. So moving on to the second last question. How does Maybank calculate settlement price?
Okay, so for this, the different issuers in the market have different ways of calculating it. But for us as an issuer, we actually take the 5-day VWAP. So it's a 5-day volume weighted average price. So some issuers may take just the 5-day weighted average price, but for Maybank, we take the 5-day volume weighted average price. Yeah.
Okay, so this is the last question. How do gearing and effective gearing differs?
Okay, so for gearing, earlier during this presentation, I mentioned that gearing is derived from using your share price. You divide it by the warrant price, multiply by the exercise ratio. So let's just take an example that if the share price, for example, of MyIG is at 0.78, correct? And you divide it, and you take the warrant price of, let's just say, 6 cents at an exercise price of 3, which is 18 cents. So if you take the share price of 78 cents divide by 18 cents, this gives you a leverage of 4.3. So what this means is that if you have a capital of 1,000, right, using the 1,000 to buy the warrant would gain you 4 times more exposure to MyIG. Okay, so that is essentially what gearing is. But for the benefit of everyone, when we want to look at gearing, we would tend to look at effective gearing because for investors or traders, what matters more is how much does the warrant move relative to 1% in the movement of the underlying. So this is where effective gearing comes in. So for example, like I mentioned just now, if your gearing is 4.3 times and you, for example, have a delta of, let's just say 70%. So you 4.3 times 70%, you have an effective gearing of 3. So this means that whenever MyIG share price move by 1%, your core warrant will move by 3%. So if you notice, I didn't mention up or down. It's because if it goes up 1%, it will go up 3% for a call warrant. But at the same time, if it goes down 1%, it will also go down 3% by the same factor. So to answer Lim's question, gearing tells you how much more exposure you're getting out from using a structured warrant, whereas effective gearing is basically what is the percentage change in the warrant relative to the 1% change in the underlying. Okay.
Okay, we actually have one last question, and since we have 5 more minutes left, we can take this question. So how does Maybank Market make the US warrant when the market is closed?
Okay, this is a really interesting question. So I hope most of the investors here are aware that we actually are the only issuer in the market right now with US share structured warrants over some banking names as well as big tech names. So how do we actually market make the US warrants when the market is closed? So for this is, if you notice in Bursa Malaysia, when you open your share trading platform, you will notice that for all of the US share structured warrants, it will only be at one bid and ask offer. This is because for all the US warrants that we have listed, we take reference to the previous day's closing price. So for example, Bursa Malaysia right now is actually closed, right? But US market is already at pre-market, correct? So when the US market closes tomorrow 4 a.m., okay, no, sorry, 5 a.m., what happens in tomorrow morning is that we will take the closing price at 5 a.m. in the US, and that will be the market make price throughout the whole day. So therefore, since this question is brought up, I would like to just say that the US warrants that we have issued, this is where we want to provide investors an avenue or sort of option, right, to gain access to the US market. And you may notice that for most of the US warrants that we issue, it's actually deeper in the money, hence why the warrant cost per unit is much more expensive, because there is more time value and also intrinsic value. This is because for the US share structured warrants right now in the market, investors would have to hold it overnight, and we understand that it is an overnight risk to you. So we structure it in a way that it is deeper in the money so that you won't lose the intrinsic value that quickly.
Okay, seems that there is the last question. So, yep, I would say that so that will be it for the Q&A session. So once again, thank you, Tucker, for such an insightful sharing session. I do hope that everyone here did manage to learn something in today's session. All right, so allow me to just stop recording first.
All right.
Okay, so before we end this session, allow me to do a little bit sharing on the Bursa Academy, which is a comprehensive one-stop e-learning platform that aims to provide investors with continuous and holistic learning journey. Okay, so if you're interested, feel free to scan the QR code, or you can type in your web browser www.bursaacademy.bursamarketplace.com. And moving on, finally, to our next webinar, which is a Mandarin session, 股票也即开箱, okay, which will be held next Monday on the 22nd May at 8:30 p.m. to 10 p.m. I already add in the registration in the chat box, so you can click on it. Right, so that will be end of the session. Thank you everyone for joining, and have a good day.
Thank you, everyone. Hope to see you in the next session. Thank you, Carmen, for hosting.
Thank you everyone. Thank you for coming.